guest speaker, Drew Batten. So we have some great new stuff to talk about, new technology, as always. In fact, let me pick up the handset here. Give me 1 second. Okay, sorry about that. Okay, so we're going to talk about some of this webinar and focus on final expense. Is we have an excellent partner carrier of ours, A- rated Oxford Life, who in the final expense world has this space covered, in my opinion. Their technology, their point of sale underwriting decisions, they have some technology that's second to none paired up with final expense. They also have a single premium whole life annuity alternative product that's very attractive in this space as well. So Drew is going to dive into that a little more. But before we move forward, I just want to kind of give you a 100-foot overview of our take in this final expense world. So obviously, Oxford has great commissions, a very competitive product. My favorite part is their technology, who no one else seems to have in this part of the market space, if you will. Also, that product paired up with our agency automator CRM tool and lead generator is a no-brainer, okay? And that's really the brains behind this whole platform. That's where it lays. And the reason why is you can go in, okay, and you're going to have your regular CRM tool that's working day and night, and then on the other side of it, you're going to get 1,000 new prospects every month that you can market to. And what's so neat is you can actually dial in the criteria. You can say, I want all male and females that live in this zip code that are all turning age 65 in 6 months, or ages 60 to 67. You can dial in whatever you want, and the system will give you names, numbers, and addresses of every prospect that falls into your criteria. Then you can send out one of our pre-made mailers, our pre-made e-blasts, and even make a direct phone call to these prospects and hopefully turn them into clients. So we feel that this awesome product with Oxford, our agency automator CRM tool, our free scholarship program, okay, that you can give any new client 1 free year tuition to now over 360 colleges across the country. Okay, so now you're talking about a win-win. The product, the lead generator, the free scholarship platform. I mean, in my opinion, and I'm not trying to sell anything, but just think about this. If you're a consumer out there and you speak to an agent that's giving all this value added for your client's grandchild or children, okay, then I don't know why I wouldn't purchase this product through this particular agent. It really makes for a win-win. On top of that, we have a complete sales system that we put together that is built around final expense. And you can give this to your clients at no charge with the purchase of any final expense products through Levinson and Associates. So we're going to show you what that looks like in just a few minutes, and all of this is free. So it's not like we're trying to sell you something or pay you, half of the typical street level commission. There's no gray area, okay? This is simple value added from an IMO that our competitors simply don't have. It's that easy, okay? So if you get your arms around that, I think everybody on the call today will walk away with something that will help change their business this next year. Okay, moving forward here, Joe is going to dive into some of our final expense resources that everybody on the call and all active agents have full access to. Joe?
Yeah, thanks, Bill. Real quickly here, I want to just show a screenshot of CarrieLevinson.com. If you don't already have a login, you can go right to the website, click on register. When you actually go to the login button and actually create your own ID and password, we've actually put together all the final expense and even guaranteed issue product resources, whether you're looking at calculators or even our final expense quote engine, all the product material, brochures, marketing guides, even some of the lead programs we're going to be diving into specifically for the final expense industry are actually located right on that website. So you'll find this underneath the product tab. There's a separate section just for final expense and guaranteed issue whole life. So definitely make sure you check out that section. And then we also have an excellent final expense quote engine that Bill's going to touch on briefly here, which is, again, available right on that website, again, kerrylevinson.com.
Okay, thanks, Joe. Also, I'm just going to add, I'm a little under the weather, so my voice sounds a little different. I apologize, just getting over this now. But again, we didn't want to reschedule this call because lots of great information here for everybody. Okay, so above and beyond everything you just heard about, this is our final expense quote engine. Now, this is consumer-facing and agent-facing. Okay, so what that means is you can go into our regular kerrylevinson.com website, just like you pull up and run your term quotes and UL quotes. We have a special final expense section, and all of your quotes are going to be right there at your fingertips. You can email, you can print the quotes, customize it with client's name, license number, anything that you want to do. Then on insprofessional.com, okay, so everybody on the call, at least at the minimum, should have their own agent website that faces clients. That's a retail website. So our free version, okay, so if you go to insprofessional.com, that's where you can go and get your very own retail website for free, unless you already have it set up, which is great. But the point behind this is, so yes, you have your quote engine you can run on a day-to-day basis for your clients, but then on your own retail website, your clients can go in, put in their date of birth, gender, and face amount, and they can run a final expense quote. And what's so neat, as soon as they put in their information, you, the agent, get an email instantly, okay, which is part of our lead capture system. So you can call Bill Levinson or Joseph Lockwood and say, hey, I see you're on my website. You just ran a quote for Oxford. And, hey, by the way, do you want me to email you the application or walk you through the EAP process, okay, and close the deal. That's the whole name of the game. And then at the last step is you take that client's information, you put them into your CRM tool, your agency automator system, and now you're going to start to drip on them. Okay, so monthly they're going to get your newsletter and your updates. So you're going to keep your name, your picture, your logo in front of all of these prospects and clients. That's the name of the game. So I just kind of want to give you that 100-foot overview so you can understand how all of the pieces of the puzzle kind of come together, if you will. Okay, moving forward here, another resource that we put together for you, okay, that is exclusive to Levinson agents at no cost to you. So if you're set up with our final expense carriers at the very minimum, if it's just Oxford, no problem. You have full access to our Legacy Safeguard turnkey final expense platform. So what this is a full kit of either hard material or an online version. And this allows you to put together all of your material. If you want to send out a hard copy mailer, if you want to set up a custom e-blast, direct mail leads, newspaper inserts, we have invitations for group seminars, and everything is built around final expense and burial. There's even an 800 support number that you can give out to your clients. So when someone or an insured does pass on, okay, the beneficiary can call this 800 number, and there'll be a live person on the other side of the phone line that can discuss everything with them and plan for the funeral planning and expenses and assist them with everything they need to know built around final expense and burial questions. So great stuff there, and this is all free. We even have a CD that you can literally go over on a laptop and turn your laptop around, a full CD presentation that goes over the whole platform, and all of this at no charge. So take advantage of this stuff, okay? And we put it together for you guys to go out there and be able to be productive and make more sales. So take advantage and get your arms wrapped around this. We even have a lead program that's part of the system as well. Joe's going to dive into that, and then we're going to show you the rest of our guaranteed issue carriers. So if Oxford doesn't fit, we have a last resource, if you will. Joe?
Yeah, thanks, Bill. So using that Legacy Safeguard program, we actually have a really great co-op lead program that actually will produce 1,000 mailers. The discounted price is just $420 per 1,000. But what's so great is you're actually marketing the Legacy Safeguard program. Every single one of those responses goes directly back to you as an agent. You can actually target by age, zip code, estimated income, even the county. So you can get very specific with the type of people you're looking to market final expense to. I think pairing this with the agency automator platform and marketing for final expense has probably been one of the most successful ways to actually write more final expense policies. So that's available right on CarrieLevinson.com. Of course, underneath the agent tools section, you can click on lead programs and have direct access to that program. It'll actually show you a sample of the mailer, what it looks like, and again, everything goes directly back to you as an agent. So just a great way to get yourself in front of more people, specifically for the final expense industry. Like Bill mentioned, I do want to point out real quickly here some of our guaranteed issue and final expense carriers. Of course, you're going to be learning about Oxford today and some real exciting products. I do want to focus real quickly here on the left-hand side on the guaranteed issue products. Of course, we have companies like Gerber, Kemper, Great Western, United Home Life. At the very, very top, you'll see a brand new carrier for us is American General, up to $25,000 of whole life. They'll actually go up to age 85 for guaranteed issue, and there is a chronic illness rider included on that guaranteed issue policy. So a very unique product. We actually have a sales contest that we're going to go over in a couple slides. So great, great product there from American General. On the right-hand side, you'll see the final expense carriers. Of course, Oxford, one of the most competitive final expense rates in the industry, and then other carriers beneath that if Oxford isn't a great fit for that client. But some great options both for guaranteed issue and for your regular final expense products as well.
Okay, thanks, Joe. So as he just mentioned, AIG, brand new guaranteed issue product. So again, if Oxford doesn't fit, we have an outlet for everybody, okay, no matter what their health condition is. And I love this new product from AIG. Great company name, great rating, as we all know. The reason why this stands out, kind of like what Joe spoke about, they go all the way to age 85. So that gives us about 5 years of extra room there, which is big in the guaranteed issue space. Face amounts $5,000 to $25,000, built-in chronic illness rider at no charge. Big stuff. Okay, and what we're doing is very easily write one application. Okay, which everybody has a client for this. Write one app. We're giving you a brand new Kindle Fire tablet. We'll mail it out to you as soon as we get your app issued. $50 minimum premium, which is very low for guaranteed issue, so everyone should get this free tablet in the mail, okay? Rates, very, very competitive, some of the best around for guaranteed issue. So call us, we'll get you set up and make sure that you have your hands around the new AIG guaranteed issue product. Okay, moving forward here, we have one last slide before we introduce our featured guest speaker. The scholarship platform, okay, no brainer, and the reason why, very simply stated, if Joe is an insurance agent and I'm an insurance agent, okay, and we're both pitching you, the consumer, okay, let's say we're both talking about similar products, the premium is neck and neck, okay, but let's say that Joe's personality is a little better than mine, and they like him better, frankly, okay? So they like Joe a little more, but I'm offering one free year scholarship for their children or grandchildren. That's up to a $40,000 value at no additional premium. And the agent is not taking a commission haircut by utilizing the program. So this is a win-win. The client is going to buy from me every single time and not from Joe, even if they like Joe more. Why? Because of the value added. So this is a win-win, very important to get your arms wrapped around the program. And once you're comfortable, it's very simple. You basically send the client an email once they buy a qualifying product. Okay, you send the client an email. They fill out 2-second information, very basic name, address, etc., and they are enrolled in the program. Okay, it's that simple. Then every year, They're going to get a statement that's emailed to them. They can log into their account just like a Bank of America checking account, see all of their points that they've accumulated. Every point is $1 of scholarship. Then they get 500 points for referring a friend or neighbor, okay, if they buy a policy. And then they get another 500 points to sit down with you to do an annual policy review. Okay, so obviously this is in your client's best interest, and it keeps your name fresh on the forefront of these clients. So this is a win-win. All it does is market for you. It's no charge. We built a complete platform around the scholarship program for marketing. We have a training series called Professor 101, e-blast. We even have a website that we put together that talks all about the different colleges that are in the program, so you could sit down with your client and act like a true college planning professional. Okay, so it's not just selling life insurance anymore. Now you're talking about college planning for little Johnny and little Susie. Folks, this is a no-brainer. We handle all of the expenses related to the Sage Scholarship platform. So take advantage of this, and if you have any questions, call any of our marketers today, and we'll make sure to get you set up. Okay, moving forward here, we're going to dive into today's feature presentation. We have Drew Batten, who's our regional director from Oxford Life. They have some great stuff to talk about. I don't want to steal any of Drew's thunder, but without further ado, Drew Batten.
All right. Thank you very much for the intros. Everybody see the screen now?
Yep, absolutely.
All right, great. Okay, well, yeah, as everyone mentioned, we are going to, I think we're going to try to talk about a couple of things here today, as they have a lot of similarity between the two products. But first, we're going to start off with our final expense, and then I'm going to briefly touch about our single premium whole life contract that really is starting to generate some pretty good momentum and steam here in the market space in light of some of the changes some of the competition are having, and it's only parlaying our success even more so. So with that being said, I want to be respectful of everybody's time here, and so let's go ahead and get jump started on the final expense side of things and go over why, if you are not currently looking at us to the final expense market, you need to get with the folks over at Levinson and get the contract and get things moving here. So before I jump into it, a couple of little household items I'd like to go over. I'd like to introduce the regionals, who chances are you may be interacting with at some point in time with your partnership here with Oxford. First person I'd like to introduce is the gentleman by the name of Chad Canese. He's actually based in our Indianapolis, Indiana location, and as you can see, he basically has a lot of the eastern seaboard and some of the Midwest area. So if you happen to be on the phone call today and you are in one of those states, you may actually end up visiting and working with Chad a little bit more here going forward. For those of you who happen to be in the Midwest states, those states that are highlighted blue, as you can see in the bottom right-hand corner, I am going to be the regional that you probably will hear from. I'll speak with from time to time as it relates to Oxford product information, and I'm actually based in our Omaha, Nebraska location. And then lastly, Taylor Davis, who's actually in our Phoenix, Arizona location. He oversees pretty much the whole western portion of the country. And as mentioned, he's in the home office, which is located in Phoenix, Arizona, and has been since 1965. And so for those of you who have clients who are interested in making sure that the products that they're buying and purchasing, or the money that they're investing with, is going to be with an American-based company, look no further than Oxford, because we will fit that requirement, given that we've been based in Phoenix, Arizona since 1965. Oxford is a leading provider of senior-oriented life insurance contracts, Medicare supplement, and annuity products. So for those of you who happen to dabble in all three of those product lines, we're going to go over the life side of it today, but do make sure that if you are doing anything in the annuity markets, reach out to the folks over at Levinson Associates, go over it, because we have currently it's a very tough one to argue with me here, but we've got one of the most competitively priced multi-year fixed interest rate annuity contracts out there, and also our indexed annuity contracts. We've got 3 different options that you can choose from. Depending on the bonus cap combination that you were looking for, we should hopefully have a good fit for you in that regards. So again, make sure you reach out to those folks and get the product information if you are doing anything in the annuity market space. A little bit about the corporate structure. As you can see, Oxford is part of a holding firm that's called Amerco. It's a real estate holding company that owns Oxford and obviously some of the companies that fall underneath the Oxford portfolio, or I'm sorry, umbrella. But on the right-hand side, you're going to see a company that really probably stands out from a name and brand recognition standpoint, and it's a name that agents like yourself have used, or they've told me that they've used when they're visiting with clients about Oxford, and who maybe aren't familiar with the Oxford name, but are going to know the U-Haul name and the new U-Haul brand just because everybody's probably used a U-Haul truck at some point in time, or maybe even the storage facilities. I've even seen people reference another competitor of U-Haul and their fleet as a U-Haul. So the U-Haul name really does stand out. So feel free to use it as, or have your agents go ahead and use it when you're out there visiting with clients and discussing about Oxford and making sure that they realize the connection there. And that should really kind of help ease any concerns that maybe the client has in terms of the size that Oxford has. But also, Oxford does have its own very financial strength to be able to hold its hat on. Oxford is rated A-, and we actually got upgraded from B++ positive in May of 2014. So when you think about it, if you take just a step back and you think about the financial environment over the past 5 to 10 years, the fact that an insurance company was able to get a financial rating increase when most insurance companies were either given negative outlooks, maybe even downgraded, or even government institutions were given negative outlooks. So the fact that Oxford Life was able to get a financial rating increase from B++ positive to not just A-, but A- excellent should speak volumes in terms of our financial strength and help ease any concerns that your clients may have in terms of the financial strength of Oxford. So why do you need to be looking at us? Well, obviously, just got done talking about the strength. We're going to talk about the competitive products here in just a few moments. As everyone mentioned, we've got very competitive commissions. So when you take a look at our product design, coupling it with the fact of how strong our commissions are, it's making this to become a no-brainer as to why you need to be taking a look at us from a sales standpoint as an opportunity when you're looking at the final expense or single premium life market. Bill was mentioning some conversations or topics about the technology and the point of sale underwriting. The tools that make us or help us make us stand out from the competition is a value. It's a value that's going to be created to benefit you, the sales agent, and also your client. And we'll cover that here in just a few moments and really get an idea of what I mean by it. But again, it's something that's there designed to make this whole process go smoother and create a value to everyone that's involved. So why do you need to be taking a look at the final expense industry? If for those of you who are on the phone call, I know we always have a handful of people who have never done anything in the final expense market. Maybe they're more health focused, or maybe they're branching off from the property and casualty business. Maybe they're just getting into the insurance industry for the first time and making a career transition. Well, final expense is a great opportunity. It's one that's only getting bigger as more and more seniors and retirees enter into this market space, into the retirement time frame of their life. That's where final expense is going to become a big factor, because as LIMRA shows, 1 in 3 seniors who are 65 years of age and older have no insurance of any capacity. So for those of you who are on this call, and maybe you do a lot of Medicare Advantage enrollments or Med Sup sales, you've probably got a pretty big book of people that you work with on a daily basis and during that time frame at the end of the year. So if you think about it, 100 people, take 100 of your clients and just think 33 of them do not have any insurance, life insurance of any capacity. To me, that should be getting you guys excited and wanting to go out and start talking to those people and uncovering who those 33 people are, because that's 33 sales. 33 hopefully easy sales that you should be able to pick up on because they already know you. It's a warm lead without even really doing anything. So it should be a great opportunity for you to jump in there and hopefully get some opportunities to generate some final expense sales, because this market space needs it and the opportunity is only increasing. Don't let people think that they go out there today and they get $10,000 policy, it's going to cover their funeral because that's what they were told at the funeral home. Well, if the client's going to probably end up passing away relatively soon, then yeah, maybe that is going to suffice. But we all hope that our clients live for a lot longer of a time frame. And if they live for another 10, 15, 20 years, there's going to be one factor that's going to be constant in that time frame. outside of paying taxes, and that's inflation. We know that inflation is going to always increase every single year. So that $10,000 funeral today isn't going to cost $10,000 when they pass away, again, in 5, 10, 15, 20 some odd years. If you take example in 2012, an $8,300 funeral in 18 years, assuming a rate of inflation of 3%, would now cost that individual $14,000. They are $6,000 short of their funeral expenses because they didn't plan properly. So who's going to fit the rest of that cost? Well, either it's going to be the kids, the grandkids, or it's going to come out of the estate that that individual had earmarked to go to their loved ones. So again, when you're visiting with clients, make sure that they've got a good idea of what the actual basis is for funeral planning if they're going to look to use a final expense policy as their funeral supplement. Also, don't let people tell you that they're taken care of because of government-sponsored death benefits and Social Security and veterans options, because one, they have to qualify for both of those. So if they do in fact qualify, they're only going to get anywhere from $255 to $300 depending on which benefit that they get approval for. So going back up to the example we just discussed where they got a $6,000 shortage, those types of benefits are going to barely put a dent into that shortage that they come up with. So again, make sure that if they are planning to use some of those things, that they don't believe that that's going to be the sole way to take care of all their expenses should they pass away. Final expense traditionally is thought of and used to take care of these types of expenses. Typically funeral things such as the rental, hearse, viewing, headstone, church services, etc. But some common things that people tend to forget about are these bullet points: unpaid medical bills, any paramedic expenses, nursing home costs, unpaid taxes, unpaid debts, things that aren't really typically associated with a funeral, but yet still are possibly options that are going to be around should the individual pass away. So hopefully when you talk to your clients and you're trying to determine what kind of a death benefit amount they should get, you're also bringing up these things, because more likely than not, they don't have these things taken into consideration, because when they think of final expense, they think of the funeral and how it's going to be paid for. They're not thinking about these things. So make sure they are taking those things into consideration when you all are trying to determine what kind of a death benefit to generate. Oxford has really two final expense policies out there that are designed to try to help in these situations. One is our assurance plan. It's a non-participating level premium whole life product designed to provide a guaranteed death benefit to help people pay for the cost of their final expenses. Now, the Assurance One is a non-participating single premium whole life product designed to provide a guaranteed death benefit to help people pay for their final expenses. So there's a reason why the definitions are the same. The products in and of itself are identical to each other. There's nothing different about the death benefits, the designs, the features, the application process. It's all identical except for one thing: how is it funded? That is the main difference between the two. Actually, I take that back. We did just make one more difference to the assurance plan than comparison to the Assurance One, but the vast majority of it is going to be the same. I'll talk about here in just a couple of moments where the assurance plan stands out from the Assurance One. But for the majority of the processes, the only difference between the two is the funding source. Are they going to be a continuous pay type of a plan? If so, go with Assurance. If they're going to be a one and done, you're going to want to go Assurance One in that regards to help fulfill that need. Here's a great sales idea. We can give you guys this template to be able to use when you go out there and you visit with people. And what this is called, the sales concept, is what do you have to lose exactly? Because final expense doesn't have to be just to put you in the ground. Because a lot of times, again, it goes back to a couple of slides ago where people think of final expense as just being whatever takes care of your funeral and putting you into the ground. That's not what final expense has to be for. And this sales idea is going to help you do that. Now, what we're going to do is we've got a husband and wife. We know that they are on Social Security income because of what they've told us. But they also have a fixed income source that's also helping make their ends meet. Now, what I will tell you is, depending on what the fixed income source is, you might have to make some adaptations to it based on, the example that we're going to show here. But for the purposes of this, the example I'm going to show is that with a monthly pension amount or a monthly fixed income aspect, they are doing, because they're like most seniors, they need as much money as they can to make ends meet, so they're going the life-only option on this. Again, if they've got different setups, you can use those different setups just as well in this example, but for today's example, they're going to do life-only options. So this husband and wife has roughly, as you can see, about $3,600 in Social Security income and then $2,100 in fixed income aspects, giving them a grand total of $5,700 of monthly income. Now, at this point in time, when you get the figures down, you're going to unfortunately have one of them pass away. In our example, the husband is going to pass away. So we know that according to Social Security rules, the surviving spouse gets the greater of the two incomes. So she's going to lose out on her $1,275 of Social Security. But if you remember, they did the life-only option on their fixed income, so she's also going to lose out on his $1,500. Now I'll just make a quick little side note. If, for instance, maybe the fixed income aspect says that if he passes away, she gets half of it, again, just plug an input and the example still works for what you're trying to show to them. But in this example, again, he passes away, she loses all $1,500. So now she goes from having roughly $5,700 in income to losing almost $2,800 of monthly income, giving her a grand total of $2,900 to live off of going forward. At this point in time, whoever you have pass away in your example is going to say, whoa, 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 I know I'm gone now, but they don't probably need all that income to live off of. They can sell the house, they can change some of the things in terms of their monthly budget and financial matters. And the response is, you're right, that is possibly true, but we don't know if that's going to happen for sure. We don't know how quickly it's going to happen. And so in this regards, not only is the surviving spouse hopefully grieving because of the fact that they just lost their loved one of however many years, but now they've got the burden of trying to figure out how are they going to make ends meet while they get their financial matters in order. They got to get the house ready to be sold. They got to sell the house. They got to pay the cost to sell the house, let alone then figure out other financial matters and aspects that they can downsize or change up in terms of their budget to make ends meet. So again, if you go out and they buy that $15,000 life insurance policy, what do you have to lose? Again, it doesn't have to be just to put you in the ground. That $15,000 death benefit can be the bridge for your surviving spouse to get from point A, when they have $5,700 of income, to now point B, where they've got almost $3,000 of income coming through. That final expense policy can be the bridge to help supplement that lost income until that surviving spouse can get their financial matters in order and still allow them the time to hopefully grieve in a respectable manner. Low-cost provider. We are one of the most competitively priced products out there. Listening to some of the carriers that were mentioned here at the beginning, not going to lie, we're going to probably beat most of them in every facet. As long as the client is eligible to be underwritten with us, the ability to get with a low-cost provider, Oxford will probably be the #1 option in most situations in that regards. We do have a comparison chart that I can provide to the folks over at Levinson and Associates to pass on to you guys that back up my claim in that regards. We're not going to be the cheapest option in every situation, but we will be one of the most competitively priced options. If your client is healthy enough and able to qualify through our underwriting, they're going to be rewarded with a very low-cost option out there in terms of the final expense sales. So how do we try to help make business being done with Oxford easier? Well, we're going to go over a few slides here that are going to really capitalize and showcase that. One, we offer a Social Security payment calendar. When you go and you fill out the application, at the bottom, or I'm sorry, at the end where you're filling out the EFT information, you've got the ability to select, would you like to have the premium come out on the 2nd, 3rd, or 4th Wednesday of the month? And obviously, you know their date of birth, so you can figure out when their Social Security payment gets deposited into that checking or savings account. And you have to know their date of birth because it's required on the first page of the application. So when you do that, you can set it up to where the premium comes out the same day that their Social Security payment comes through, therefore improving those persistency numbers, keeping that business on the books, helping you get your renewals, and then helping you avoid having to go out and chase people down to get their premiums caught back up so that you can keep that business on the books and keep your renewals. No agent likes to do that. This is a great way to combat that situation and that issue. So again, as long as they are getting their Social Security payment through their checking and savings account, We can match it up to where it comes out on the same day that they get it. We do not take the Social Security debit card, and we do not allow for credit card payments here at this point in time. So that's typically one question that always pops up, so I'll just go ahead and get it out of the way now. If they're going to pay monthly, they have to do it through a checking and or a savings account. So go ahead and product specifics. Ages are 50 to age 85. As mentioned with one of the other carriers at the beginning of this session, we too go up to age 85. So again, a very low cost provider all the way up to age 85. Unlike some of the other companies mentioned, we're not a guarantee issue company. So therefore, for your folks who are healthy, they are better suited going through a product and like this in that regard, where they can go through that underwriting, get the benefit of day one coverage with a low-cost offering. So again, if they're, depending on their tobacco status, determines what kind of a rating they're going to get. I know the general rule of thumb is never quote anybody preferred, especially in the senior market space, because they're never going to get it. Well, with Oxford, if they are a non-tobacco user, you always quote them preferred, because if they're going to get coverage with us, they will get the preferred rating. If they're a tobacco user, regardless of how healthy they are, if they're a tobacco user, you always quote them standard. That is the best rating they will get. As mentioned, we do annual, semi-annual, quarterly, and monthly payment modes. And if they want to be billed, that is quite all right. We can bill on an annual, semi-annual, or quarterly option. Monthly billing is not available. Again, monthly payment is only available through checking or savings account deposits. Death benefit ranges anywhere from $5,000 to $30,000 in death benefit, and there is cash value that will generate within that policy, not at a rapid amount or anything along those lines, but there will be some cash value that will generate, and that can be accessed through a policy loan. So as mentioned, our Assurance One product, here are the specs and the design for it. As mentioned, it is pretty much identical to the previous slide I just showed you, minus the third bullet point, which is single premium. Now, I will say that we did just make a new rider to our Assurance plan that makes it a little different in terms of design compared to the Assurance One. We have just added a terminal illness rider and a common carrier accidental death benefit at no additional cost. So as long as the policy is written, there's no additional documents or anything needed to be written or included to get those benefits. It's automatically put into the contract at no additional cost. It's part of the program. It's part of the product. Do check with the folks over at Levinson and Associates, because not all states have approved it yet, but that is one big difference in terms of the design between the Assurance plan and the Assurance One that you're looking at right now. Again, Assurance One handled the exact same way as the final expense product, except for this one is again funded through a single premium chassis rather than a level premium continuous pay contract. Now let's talk about the value-added benefits, the things that help make Oxford stand out from the competition, the technology aspect that Bill was mentioning at the beginning of the webinar. Basically, we understand that by saving time and money for you and your client, that is generating value, and everybody likes value. Value is what makes companies stand apart from each other. So therefore, when you write an application with Oxford, if you fill out the application correctly and there's nothing missing, that policy will be issued within 48 hours guaranteed. That means your client's going to get their policy quicker. That means you're going to get paid quickly as well, because once that policy issues, as long as you are set up on a daily commission structure where we deposit your check or your commissions into a checking account, you will get paid once that policy issues. So take a moment here. Let's work on the timeline. You take the application today on Wednesday. If it's in good order, it will be issued by no later than Friday. We release commissions on Friday, so depending on how your bank works, there's a very good chance you could have that commission within 72 hours after taking the application. Whether that means on Saturday or Monday, we will pay those commissions very, very quickly. There are advancing options available on that level premium final expense. Get with the folks over at Levinson Associates so that they can go over the advancing options that are available, but we do allow those here at Oxford Life. For those of you who are technology savvy and use smartphones and tablets, we don't have a e-application yet. It's in the works, so that will be available hopefully in the near future to help you out when you're out in the field taking that application, hoping to make the application in good order so that it gets issued quickly and gets paid quickly. But for right now, it is still a paper application. But what you can use, if you use your smartphone and your tablet, is the ability to get quotes right then and there. You don't have to take out a bunch of rate sheets and figure out with a calculator what the rate's going to be and possibly move a decimal point in the wrong way. You've got your smartphone, download the Oxford mobile app to your phone, and you can go input the information right then and there, and it'll tell you what the pricing or the premium quote would be for the client, not only for the final expense, but also for the single premium life, for both single premium life contracts, and also our annuity products as well. So again, a nice little reference tool that you can use at your fingertips with your smartphone or your tablet. A true point of sale decision. Here's another value added benefit to help us stand out from the company, because in order to get you guys paid in 72 hours, get the policy issued within 48 hours, the underwriting has to be on point and it has to be quick. And so therefore, that is our true point of sale approval decision. All the underwriting is done at the time you take the application. So you take the application with the client. There's 14 health questions. If they answer no to all 14 of those questions and you believe they're being truthful about it, you proceed to the telephone interview. I'll go over the telephone interview number here in a little bit, but that telephone interview is where all the underwriting is done. This is a simplified issue application process. There won't be any medical exams, no blood work, no request for medical records, no blood, urine draws, or anything along those lines. Just your client answering the health questions and answering any additional questions that may generate from some of the MIB or script checks that we pull. But if they answer everything correctly and the reports validate their answers on the application, it's going to be one of the easiest telephone interviews you've ever done, probably 10, 12 minutes and you're done. Now obviously that average interview time, about 15 minutes, typically is going to involve some additional questions that may generate based on what we see on the MIB and the script check. But hey, we're dealing with seniors. Unfortunately, that is going to happen. But again, you set the expectation properly, it's not going to be an issue, and they're going to get an underwriting decision at the end of that interview that makes everything else fall in line in terms of getting it issued and getting you guys paid. Now, if for whatever reason your client has an appointment to get to, you've booked yourself too tight in terms of appointments so you don't have time to sit there and do the telephone interview right then and there, that's fine. You have what's called option B, where you can still have that telephone interview conducted at a later time. I will tell you this right now, ladies and gentlemen, you have to schedule the telephone interview yourself. We will not schedule it for you. So if you submit an app without the telephone interview being done, there's a very good chance it's going to sit there until you call and you schedule the telephone interview on behalf of yourself and the client. So again, make sure you call and get that telephone interview scheduled. Our interviewing department will then call the client, conduct the interview at the stated time, and then call you and let you know if it's been approved or declined. And then at that point in time, you proceed as normal in terms of the normal business submission processes to get the policy issued. Everyone always asks for an underwriting guide, and hopefully the folks over at Levinson Associates can provide you that, because it is the application. It's as simple as that. If they can answer, again, yes to all those health questions, then, if they can answer no to all those health questions, meaning that they don't have any of those conditions, again, it's going to be straightforward, pretty easy, cut and dry. If they answer yes to any one of those health questions, you might want to take a step back, do a little bit more research, figure out what exactly is going on, maybe call our underwriting team to get an idea of exactly what's going on and how we might be able to assist or help out in that regards. Or if they just flat out say, oh yeah, I guess I did have cancer a year ago, then that's when you're going to want to pull out one of those other carriers that's maybe on a guarantee issue or a graded basis that will be a little bit more able to take one of those types of conditions on. We do have a height weight chart, very similar to what you see here, to help out with the field underwriting aspect of it. And this is probably the screen I'm going to spend the most time on because it is the most misunderstood part of the Oxford plan, and I think it deserves some time to be able to take a look at it and really make sure you guys understand how this works. We are a rules-based underwriting system. We are not a medication-driven underwriting. That's not how we do it. We are rules-based underwriting, which is based on impairment or conditions only. Now, what tends to unfortunately happen is one medication out there is able to treat 500 different conditions, and one of those conditions, unfortunately, is going to be found on our application. So when you're doing the telephone interview and we get to the part where they go over the MIB and the script check, chances are the script check's going to have a couple of medications or a medication that is connected to a condition we underwrite for. This is at this point where the interview might go a little bit longer, where the interviewer is going to ask the client about the medications on that, that the client's had, trying to assess what's going on, what the condition is that they suffer from. If at the end of that interview, they still might be able to approve it, but they may not be able to depending on how many there are and what the answers were and the conditions that the client says that they were taking it for. They might have to decline the interview right then and there at the end of that interview because of those answers. Does not mean that it does not mean that it is a clear-cut decline. If the interviewer gives you the option to refer it to an underwriter, ladies and gentlemen, you need to take advantage of it, because the underwriter is the only one that has the authority to approve some of these situations based on the medication and condition combination that the client may have. Again, they may not have any of the conditions that we look for, but if that medication's on there and there's a chance that it could be, and based on the feedback that the feedback the client gave, there is a chance that we have to send it to the underwriter to get final approval. So again, if the interviewer gives you the option to refer it to an underwriter, please take advantage of it, because more often than not, it's going to be a favorable result and that policy will get approved. So again, please make sure you take advantage of that when it's given to you. As mentioned, that's one of the reasons why you want to visit with our underwriters, is on those decline situations. But if you're doing your field underwriting and you see one of those situations where you're not too sure how to answer the health question, it could be a yes, it could be a no, or you know that medication is typically a decline, but they're not taking it for the condition we underwrite for, reach out to our underwriters. Talk to them about the borderline scenarios or the questions on specific issues, pre-qualification. That is what they're there for. We do not lock up our underwriters to be inaccessible to the field. You can reach out to them and talk to them about those types of situations to see if it's even going to be worthwhile to pursue it with Oxford. So again, reach out to the underwriters. The phone number is down at the very bottom of that page at 888-837-3387. Please take note of their operating hours, 8 a.m. to 5 p.m. Central Standard Time. So if you are doing an evening appointment and you do the telephone interview and it does cause a decline, or it happens to be close to the end of the business day, or maybe, unfortunately, our underwriters can get backed up. So again, if you do take advantage of that refer to underwriter feature, do take into consideration that they may not be able to get back to you right away. If they're there and they can take the call, they'll do it. But there is a good chance that they may not get back to you for a few hours and or the next day, depending on how backed up they are or when the interview is taking place. The top number is the number for the telephone interview. Don't worry about jotting that down, because it's on the first page of every application so that you can call it and reference it right there. But you will want to take note of the operating hours. Again, Monday through Thursday, 8 a.m. to 9:30 p.m. Central Standard Time, and only open until 5 p.m. Central Standard Time on Friday. No weekend hours. So if you are doing a weekend appointment or something that happens to be after hours, do make sure you take advantage of option B. That's going to be your best and really only alternative at that point. So again, for those of you who are very technology savvy, you're active on Twitter, Facebook, LinkedIn, go find us. Type in Oxford Life. Go ahead and follow us there. It's a great resource to get up-to-date information, new announcements, new things that unfortunately maybe slips through the cracks from time to time in terms of emails. If you're like me, you probably get hundreds of emails a day and you can't keep track of every single one, so unfortunately some things do fall through the cracks. So if you do follow us on social media, it's a great alternative. It's not going to have everything, but at least from a marketing standpoint, we'll have a lot of good information for you guys to be able to keep up to speed with. With that being said, I know I mentioned that we were going to talk about the single premium life, and so I'm just going to go over a couple of real brief things with regards to that because of how competitive it is. And basically, the Advanced Wealth Transfer is our flagship single premium life contract. Unlike the Assurance One, where you can do $5,000 to $30,000 death benefits, with the Advanced Wealth Transfer, you have to have enough cash to generate a $20,000 death benefit. But you can go up even higher, depending on how much the client's looking into. So as an alternative to the Assurance One with higher deposit amounts, you're going to want to look at the Advanced Wealth Transfer. Plus, it also does have some accelerated benefits not found on the Assurance One product that we discussed earlier. As I mentioned, we've really revamped this product. In the past, a 60-year-old female, if they had a $100,000 CD, for instance, sitting there, they wanted to deposit it into the Advanced Wealth Transfer. In the past, they would have gotten $202,000. Not a bad return, quite honestly, but we went back because we were listening to the field, and the field was telling us, hey, the death benefit's strong, but there's higher competition out there. Well, actuaries listened. They went back and they changed it. And that same 60-year-old individual just got a $23,000 uptick in their death benefit. So now a $100,000 deposit on a 60-year-old is now getting $225,000 in death benefit. Day one. There is nothing else out there that's going to get you that kind of a return day one, let alone 15, 20, 30 years out there with no risk. You can get it probably putting it all into the stock market and taking the roller coaster up and down and possibly get there. Again, depending on what kind of a vehicle, you may still have to make that taxable, whereas with this, it's a tax-free death benefit to the beneficiaries, which is probably what those funds are earmarked for anyways. So here's just a quick example. Now they took a 65-year-old, $100,000, now going to get a $197,000 death benefit from day one. As you can see, the cash surrender value equals about the original deposit between, in some instances, it's going to be the third year, other instances roughly right after the fourth year. So there is no return of premium feature on it because of the fact that they are going to get their original deposit back after holding it for 3-4 years in that regards. As mentioned, there's some nice accelerated death benefit features for terminal illness, nursing home, and home health care, or chronic illness benefits as they like to refer to it as. If they are terminally ill, basically, and they've got less than 12 months to live, they can access 75% of the death benefit to a maximum of $100,000 to help out with whatever expenses, issues that they may be incurring due to this terminal illness benefit. So if we use our 65-year-old female with the $197,000, 75% allows her to get $148,000 to be used for whatever she needs during her last year of life. But again, hopefully you remember there's a $100,000 maximum. So she's going to get $100,000 to help with whatever needs she has and still give almost $97,000 to the beneficiaries as she originally earmarked it for when she set this policy up before. Now, what about the nursing home side of it? The policy's been enforced less than 5 years. They get 1% of the death benefit to a maximum of $4,000 per month. Again, cumulatively, no more than 75% of the overall death benefit, no more than $100,000 of the death benefit paid out. But if it's been enforced for longer than 5 years, again, 3% of that death benefit subject to the $4,000 max and the same 75% $100,000 maximum. So using that 5-year, less than 5-year mark, got somebody with $197,000, 1%, they're going to get almost $2,000 to help pay for qualified care expenses. If it's been enforced for longer than 5 years, they're going to get almost $6,000, but hopefully you were paying attention. $4,000 is the max, so they're going to get $4,000 to help take care of some of those expenses for qualified care. And then the chronic illness, home health care, they can't perform 2 or more ADLs. They're going to get 1% of the death benefit to a maximum of $2,000. So again, very, very competitive product. I'm not going to go too much more into it for the sake of time, unless you guys want me to continue to go through. I will finish up a few more slides.
Sure, we're fine. We're actually running a little behind, so we're going to send out slides to everyone regardless.
Okay. And I guess, going back, one of the things I made the comment about is, finding an asset that can compare to this type of a product. Where can you do it? The vast majority of the funds that we see going into this type of a product come from your CDs, come from your money markets, your non-qualified accounts. And so in this example, they took that 60-year-old with $50,000. She's got it in a CD right now earning 2.5%. Well, quite honestly, if you can find a CD earning 2.5%, it's going to make this example hold true, but the vast majority of CDs aren't even paying that, so it's only going to make my example look even more better. But basically, you take that $50,000, day one, she's going to have a value of $112,000 going to the kids, the grandkids, wherever it is that she wants this benefit to go to. So in 20 years, that CD is going to be at $71,000, still short of that single premium whole life contract by a good $40,000. She's got to live until 90 just to get within $20,000 of a shortage. So again, with the CD rates not even being at 2.5%, why are you letting your clients leave that money sitting in a CD, having to pay taxes on it every single year on a very, very minuscule rate of return that they're not going to really be able to capitalize on, when starting in day one they could have $112,000 going to their beneficiaries, almost $62,000 more than what they've got now, and a good $30,000 more than what they could get if they live for 30 more years. So again, very, very strong concept. I hope you take a look at it. If you guys take a look at the brochure, it will give some more examples in terms of situations where you can have your money, have your cake and eat it too, put some money aside, but also use it if you want to go on a cruise or just have some extra savings in terms of that regards. This situation where if they've got some loss due to stock market performances, getting involved with an accountant to help try to get some of those losses written off, but still taking the rest of that money and putting it into the single premium life and getting a bigger death benefit than what they originally had earmarked at that $75,000 mark. So we've got some good examples that you guys can listen to and look at and review in terms of the brochure. But the one thing I guess I'll finish with here in regards to this single premium life is the underwriting. It's identical to the underwriting we talked about with the final expense. So it's a point of sale underwriting decision. It's a simplified issue underwriting concept. 14 questions just like the final expense. So it's going to give your clients and you the benefit of the doubt and knowing that right then and there it's going to be approved. A lot of these types of contracts have some underwriting components where you got to go get APSs and you got to go through the whole kit and caboodle, and after 2 weeks of waiting, you finally get an answer. This is not going to happen with us. We do all that underwriting right then and there so that everyone knows how it's going to be approved. So with that being said, there's just the specifics like the final expense, 50 to age 85, standard and preferred rating schedule, just enough cash to generate a $20,000 death benefit, maximum issue amount. Again, it's going to depend on the age since it varies depending on a 60-year-old and an 80-year-old and a 75-year-old. It all depends on the amount of cash that we can take to get the max death benefits. So reach out to the folks over at Levinson & Associates, and they can provide all that for you. So with that being said, guys and gals, that is Oxford Life in a nutshell in terms of the life portfolio.
Okay, great job, Drew. We appreciate it, and we had a lot to cover, so we're going to also email out a copy of the slides and some great brochures, and then we're going to host another webinar with Drew just to focus on that single premium product, because that's going to be huge for 2017 and moving into the future with a lot of these new rulings that might go into force here. So that was awesome, though. Great stuff. We're going to breeze through this. We have 2 minutes left. I know we're running way over, so I apologize. But great stuff that I want everyone just to make some notes here. We have brought in, and Joe, let's just skip to the next slide here. We brought in the top over-the-phone selling person or consultant that exists in our market space, okay, period. His name is Todd Ewing. He is single-handedly responsible for building SelectQuote, okay, to what it is today. He also helped build Transamerica's direct-to-consumer or D2C channel, which generated $30 million in just 2 years. So the guy is brilliant when it comes to selling over the phone, and we have brought him in as a consultant to teach and train our agents. As you can see, we have a 3-part series on the bottom there, session 1, 2, and 3. Write down those dates. Yes, we'll send out an e-blast but jot down, especially the first one on the 9th, 2 p.m. Eastern. These are going to run for an hour each session, so you're going to have a total of 3 hours of one-on-one training with Todd Ewing. And I'm telling you right now, the guy is awesome, well worth the time spent, and again, free for all of our active agents. Also, I'm going to add, Drew had some great stuff to talk about with Oxford, and we want to make sure that you get set up. In our email today, we'll include licensing for Oxford if you're not already set up. And just keep in mind as well, you have to be active under Levinson to take advantage of the CRM tool, the lead generator, the scholarship program, Legacy Safeguard. So even if you have a contract and you need a release, we'll help you get everything situated and make sure that most important, you're happy and set up under Levinson. Okay, so we'll move forward to our last slide here, and we'll just end with this real quick. Joe, just let's go one more slide just because of time here. Okay, we'll end with this. It's always important to end with a positive note. I feel the whole webinar was great, but I love this motivational stuff. I think it's so crucial to what we do every day. And, you know, I was just talking to Joe in here earlier, and we were talking about Starbucks. I have a great story on Howard Schultz and how he got started. We all know it's a great story, but we're hearing all this stuff now in the news on he made some decisions that are getting some negative and positive feedback all over the news and the internet and social media. So I said, you know, Joe, it's a perfect time to bring up this last motivational quote. It's so important that we all run our business. And it can be a one-man show, or it could be, 262 people, whatever the case is. But this is your life. It's your business. So important. Leave your emotions at the door and run your business as a business. And if someone hurts your ego a little bit or someone hurts your feelings, don't ever let that get in the way. And I'll tell you right now, we have a few of our biggest agents. Some of them are even on this call right now that, you know, there's times when you get frustrated, but you have to remember this is a business and customer service is key. So do whatever it takes. Keep your emotions at the door. I love this by Leonardo DiCaprio. With that said, have a wonderful rest of the week, a great weekend, and good selling. Take care, and thanks again.